This conference will now be recorded.
Okay, good evening, everybody. It is Saturday, September 24th, 2022. This is Greg Morton. This is the weekend video update for Canslim Growth Stock Investors, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, this is for educational purposes only, not recommending stocks or securities to buy or sell. All investing has substantial risk of big losses, especially right now. So we want to learn first and only then invest. And of course, Canslim is a registered trademark of Investors Business Daily. So today, let's look at the impactor like we usually do. What do we see this past week? Constructive action or destructive action? Pretty clear. Things were just totally blown up by the Powell press conference hawkish talk, which followed the Jackson Hole hawkish talk, which hand grenaded the market back when it occurred. We'll look at the market review and discuss it, give you a trading plan, which is really a non-trading plan this week. And then just a quick note on our educational monthly meetings, as we had our big meeting this past week on Wednesday following the Fed meeting and press conference. So as always, the M is the most important letter in Canslim. Um, Bill O'Neill teaches us we just want to diagnose, we want to interpret, we do not want to predict the future. We look at three things: the actions of leading stocks. Last weekend, I asked the question, are the three musketeers, the true market leaders that we were looking at, going to survive? Can some others join in? The answer to that this week was nope and nope. Um, Actions of stocks owned. Well, the group teaching portfolio, our sell rules took us out of all long positions, so we don't even need to look at that. There's just one small short position, which I discussed in our meeting this week in detail. Look at the market pulse, distribution day count, price and volume on the indexes, color and book, and it's just pretty much a disaster. So let's hop out and take a look at it. So here's the NASDAQ um, daily chart. You can just see, starting with that Fed press conference, we had a very ugly outside reversal day, just plunged from there, getting back to being 35% off. Moving average lines are in the wrong order. The index has plunged through them. Just a ton of weakness showing there. S&P 500, same thing. And look, these are coming down, getting close to undercutting the June lows. Same thing with the NASDAQ. The NYSE, actually three of the indexes did undercut the June lows. So the NYSE did it. The Dow did it. Again, the moving average lines are just plunging. Everything is just ugly right now. Russell getting close to undercutting, but the S&P 600 undercut also. So that gave us three of the six that I tracked have undercut their June lows already. Let's go back real quickly. Let's look at the NASDAQ weekly, because picture becomes clearer each week. As I talked about at our meeting this week, can clearly see that we're working on this third leg down in this bear market. So not very far from undercutting the June lows. And if that happens, we'll just see how far we come down and if that leg ends. And of course, there can be a fourth and a fifth leg down. But most of the bear markets, we get to three or four, then hopefully we're putting in a real bottom. We are 10 months into this now. So if we get to November 22nd, 24th or so. I don't remember the exact top back here, but it was in that range. We'll be a whole year into this thing. So we are past the average length. So that's good. Hopefully we're near the end than near the beginning at this point. I certainly would think that would be true, but it might not be. So I don't want to predict, but to me, this looks very similar. Look at that three legs down. Let's just go back to the financial crisis bear market real quickly. No, it was deeper. This was down over, well, it was 50, almost 56% total, and it lasted longer, but you can see the three legs down pretty clearly. Interestingly, this last leg down only undercut, this was still about a 25% drop for this leg off the peak right there, but it only undercut by about 30 points. But this market, with all the bad news and weights on the market, if we undercut, I'd be surprised if it was only 30 points. But again, I don't want to predict, just want to interpret and study, but just not looking real healthy right there. So we looked at that, like I said, group teaching portfolio. So the true market leaders that we've been looking at this week, the bear just mauled them all. And that's what I said we were looking for. Could they hold up, or was the bear going to chop down these last strong trees in the forest? And the question got answered. Not the answer we wanted, but if we're going to go ahead and put it in a third leg down, actually that's probably good. So let's take a look. The NASDAQ was down 5.07 this week. I think that's the second week in a row of drops of over 5 points. So let's go back to Market Smith. We looked at this list at our meeting this week in more detail, but here's the true market leaders that were doing so well. Oh, I got to reset the date. Makes them look better than they are. Okay, so here's the ones that we were tracking. So remember, for the week, NASDAQ was down over 5%. Enphase was down over double that, 12%. And we expect growth stocks to get twice as hard. We just like to see the leaders hold up, and they were still holding up last weekend, but they're not this weekend. Shockwave doubled the NASDAQ decline for the week. Celsius did the same thing. Lithium almost doubled it, coming back to the 10-week line. Wolf, 8.37% for the weeks, held up a little better. And then I had a tier two sort of true market leader, some other ones to keep an eye on. So Vertex, relatively speaking, held up better this week and is actually still have a flat base that it has not broken down out of. Array was down 6.17%, but the chart's broken, so that probably will come off this list. Neurocrane down 2.44. Again, relatively decent decline compared to the index. It's still holding a flat base. Tesla 9.2% for the week. Kamiko 9.5. On semiconductor 8.1. So we just see serious damage there and serious weakness. And if we look at the coloring book, we can just see how ugly it is. I mean, as of Friday, we have only 5 buying days, 16 selling days, and then look at the distribution. We have 8 on the NASDAQ, and these are white. Once IBD goes to incorrection, they quit tracking the distribution day count, but I still like to track it. I always want to know how much distribution there is, so I just turn them to white so you know that it's my count. So we're now up to 8, 11, and 12. We have clustering several days, which is distribution on steroids on 3 of the indexes. They just got slammed 2 days this week. I have 2 days bolded in red. Those are just super bad days, big plunges. Market school exposures at 0. New lows are dominating new highs. Just nothing pretty to look at. Next Fed meeting is November 1st and November 2nd, just to keep an eye on that. So not much constructive there. Let's go back. Here. So true market leaders took it on the chin. We talked about that. Current market thoughts, things to look for. The Powell press conference just said it's all about inflation. Nothing else matters. So very, very hawkish talk. QT, quantitative tightening, is supposed to double to 60 billion per month coming off the balance sheet and 35 billion per month coming out of the mortgage-backed securities. But Powell said during the press conference, he finally acknowledged they're not even doing anything on the mortgage-backed securities yet. And I'd been looking at the data. I knew they were still going up. They made no cuts for those first 3 months. They said they were going to cut. So we'll just kind of watch that. Even though their minutes say they're still going to do it, Powell in the press conference acknowledged they weren't doing it yet. And it wouldn't be triggered till sometime down the road. So MMTS are all red. Window of opportunities closed. IBD's in correction. At distribution days, clustering piling up. I showed you that. It's just a distribution dominant tape. Nothing constructive. So current market signs for me are predictively, we're back to a train wreck. Very, very ugly. This should be the wallpaper for your computer, your trading screens this week, just to help remind you things to study or watch. Can we get a rally day? Do we get a follow through day? Where is it in relationship to the moving average lines? Can the window of opportunity open back up? Can the MMTS signals start coming off of red somehow? Can we see more new highs and lows each day? Can the indexes retake the moving average lines? I mean, there's just a ton of work that this market needs to do. And most importantly, do we see leading canceling stocks setting up and breaking out? So our weekend routine matters even in these really bad markets. So the trading plan, there's no need for Canslim growth stock investors to take any significant exposure until we get at least a rally day, preferably a follow through day. And I should have put in there, watch for the window of opportunity signal to open. And is very important. It took me a long time to realize there was an and. We have top-notch fundamental Canslim stocks set up in full and proper basis and breaking out. Our very experienced investors may be taking early entry in a nearly full base that gives you an early alternative entry per year rules. So pilot positions, do you try anything now? Do you not try anything? If you're going to do that, just kind of here's an outline of what we mean by a pilot position. So if you have a $100,000 portfolio, you want to own 10 stocks. So that's $10,000 allocated to each one. So normally under Canslim, your B1, B2, and B3 would be 50%, 30%, and 20% in a stock. So a pilot to me is just 10 or 20% of a full size. So that would only be $1,000 investment or a $2,000 investment in something that you really liked and it set up and it broke out, and it was a great Canslim stock. So that would only be putting 1 or 2% of the total portfolio of 100,000 to work. If it fails, you're using a 7% stop, you're going to lose $70. If you bought $1,000 worth, you're going to lose $140 if you bought $2,000 worth. So that won't kill you, and is one way to do it if you like you have to own something right now. But it's better to wait for some of those lighthouses to start lining up. So do I have any positive thoughts at all this weekend? Well, yes. Overall, the Fed is like a pendulum or wrecking ball, which is a big pendulum. It always goes too far in both directions, and its predictions are always off. So in 2020, the Fed said there were not going to be any rate hikes through 2022. That was June 10th. Um, they were going to keep it close to zero through the end of the year. And then just last December, Christmas, not that long ago, they said, well, we're just going to have 3 1/4 point hikes each in 2022. And now we've had what, 3 3/4 point hikes each. So they just get this stuff wrong. So the Fed's going to back off at some point. Maybe by that November Fed meeting, we'll get some relief language or get it, things are working. We see inflation coming under control. What we're doing, we know it'll take time to work. We expect it to continue to work. And the market can put in a bottom, or maybe we'll have put in a bottom by then, and that will start pushing us up the right side. And also maybe we have that capitulation, throw in the towel bottom in place. I'm still looking for that big put call spike, VIX spike, maybe some hedge funds fail, maybe some of those lower priced ETFs shut down, maybe Kathy Wood has a lot of outflows, some things that would show we have capitulation happening. So it's important to do our homework. We always want to be in touch with the market. One more positive thought, the worse it gets to the downside, the better it's going to be to the upside when it gets here. When everybody's worn out, when everything's trashed, the most money is going to be made in those Canslim leaders that properly break out when we start that new uptrend. So our monthly meetings, we met this week. Our next meeting is Tuesday, October 18th. You register for those at the Stockyard Meetup site. Tuition, you can attend live if you want to. Everybody gets recordings, slide decks, links to anything I send out after the meeting. If you're a first timer, I give you a courtesy copy of the prior month's meeting. Here's what we covered this week. I thought it was a good meeting. We got in a lot of educational material. Talked about the M factor in detail, did Canslim teaching nuggets, which was about 10 different teaching principles, and we pulled some of these lists up in here and reviewed them. We went through all these lists in Market Smith, which are my list of true market leaders, potential, ants, mutual fund acceleration, all these sort of things. We spent a lot of time doing a deep dive on a potential short candidate, which is one of the SPACs that we've talked about. Looked at the group teaching portfolio, talked about IPOs. There really wasn't much to talk about. And then we did open mic, Q&A, and chart review. So we do that every month. Prior meetings are available to order if you don't have a set of written sell rules. I spent 3 meetings covering that. That's a really important topic. Also on how to do a weekend review. Spent 2 months, September and October of 21, covering those. So if you're interested in those, you can email me. I'll send you the prior webinar ordering information and how to do that and get those to you. Those are $15 each for the past meetings. And just so we can wrap things up with a little bit of fun, just remember, one of the things I like to say is that charts are like yoga pants. Neither one lies. So we look at the charts like Bill looked at the charts. That's it. I'm out of here. You guys have a great weekend routine.